More third quarter numbers are coming out, and we're going to go over them next. Yes, we're going to go over third quarter values. Do they go up? Do they go down? What's happening with the market? We're also going to go over the Cobesi letter, what they see is happening. We are seeing slight amounts of listings. They're reducing them down, but who actually are those sellers? All next on Real Estate Daily. Welcome everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage markets. Now, before we jump into it, do me a favor, hit that like button. Boom, boom. I know it's kind of exciting. We're starting to see buyers come back in the market. We did see an uptick in mortgage when people actually fill out mortgage applications, I should say. We saw a small uptick in it, and it's simply because we just saw rates just drop about 0.5 point. But let's jump right into it. It's DS News we're going to start off with here. And it says more than 80% of U.S. metros reported quarter 3 home price gains. Well, it says 182 out of 221 posted home price gains as 30-year fixed mortgage rate edged closer to 8% mark. So I expect in the fourth quarter, as usual, we should see about a flat market, or actually, just like last year, we went down a little bit, but rates weren't as high as they were this year as they were last year. So we might see a little bit of stalling out. We also have a lot of macro issues out there, including Israeli war that's happening, the Middle East conflict. So with all that being said, we're having a little bit more issues that are going on. We did see another bank collapse last Friday, and I think we saw another one this week happen. So there's all that's going on out there in the world. So we got to make sure that people aren't really freaking out, and that's why becoming a homeowner is so important to you. You do not want to be part of a rental, rat race, and what's happening with people is they're being more and more, wanting to be, stuck with the U.S. government and looking at them to bail them out or give them some type of, free money so they can live somewhere. You don't want to be part of all that. You want to be independent and not have to keep, going back to the U.S. government for more and more money. All right, so let's jump to the next one. Cobesi letter. It says homes listed for sale beginning to see a significant spike in price cuts. October, 25% of sellers cut the price of their homes according to Reviture Consulting. This is sharply up from 17% last year at this time, and all the time low is 8% in 2021. Well, it was 17% last year. It's 25% this year. Again, we're just seeing that rates were a little higher this year, and so less buyers were out at an earlier point. But if you look at rates did spike this time last year. Actually, it spiked at the end of October, and now they're spiking in the first week of November. So we're basically looking at mirrors of 2022 and 2023, and that's why we're seeing property values go down, or at least sellers making property cuts. Now, you look at it, and if I look at connecting the first article that we talked about to the second article was, well, we saw prices go up at 80% of the markets. Well, in October now we're seeing price cuts happening. Well, they're cutting it because those prices that are going up, interest rates went up. Now they're coming down just a little bit. They coordinate perfectly together. And until we see something happening with Jerome Powell and the Fed, or we see the bond market go down and everyone's kind of buying bonds, we're not going to see any of these cuts in at least big cuts in interest rates here in the market. But like I said, and I've said this in the last 2 or 3 weeks, when you see nobody buying homes, okay, and there's no inventory on the market, you need to be thinking about your plan to purchase a home. Because if rates drop to 5%, there'll be 10,000 people rushing into this market instantly. Boom. And we'll have multiple offers, all throughout, homes in Southern California. And again, driving home prices right back up. We're going to see that at 5%. I don't think that's a doubt. The only way it doesn't happen is if there's a black swan event that happens in the world, and that's not going to be a good event for anybody. Forget the housing market for any of these sectors. All right, and then I always make a little joke of this. This is just so funny. Just imagine if you were filing your taxes and you had to put on the value of your property on your taxes. Well, every single day I hear people go, "Well, my house is worth $500,000. Oh, no. Hold on, let's reel that back in. Your house, I'm going to give you I'm going to give you a valuation of what your property's worth. Here it is. Boom, it's $495. All right, it's $495. Imagine if you took that and you use that value on your taxes, and then the government comes back and sues you and says, no, it's worth $400,000. You're like, whoa, hold on. I have a professional real estate agent that gave me a valuation, and the government is coming back and saying it's not worth it. This is, whether you like Trump or you like Biden, I don't give a shit, okay? Everything's got to be on an equal playing field. You cannot go and tell me that the New York AG decided, hey, let's go ahead and cut their valuation down on their taxes because I want it to, okay? First of all, the taxes were done by your accountants, right? And your accountant, what they do is they double check all the evaluations. They go out and get valuations for your property. I don't know where this lady's coming from. She has nothing better to do than go after, tax evasion. This is all political grandstanding bullshit. Okay, let's be very frank. We are here as a nation to absolutely work hard, and at the end of the day have money when I retire. And part of that pot that I grow as I get older in its 401ks or retirement funds, but it also, and the majority of it is going to typically be in your house. I know my parents, they made about $400,000 of equity in their house when they sold it from when they bought it. They turned around, bought a house in a retirement community in Missouri, and they lived off that money as well as pensions and Social Security. But if they didn't have that money, they'd be living in poverty. Okay, poverty. So let's go and think this through on a better range. It doesn't matter what you think this property's worth, what I think this property's worth. A professional said it's worth more money. Why are we arguing in court over this? Isn't there something better to do in your time? I mean, like go after criminals? I mean, wouldn't that be, really what's happening? I hate to say it, but the states of California and New York just want to do political grandstanding. They're not here for their citizens. They're here for other agendas. And that's what we're seeing here. I laugh this off like, hey, so if I wrote what Zillow put for my home, or Redfin put for my home, and say, well, they put it there. They have their own analytics, and they put that valuation on my home. But now the state of California is coming back and saying, no. Sorry, we don't believe it, and we're going to sue you for that, for fraud, because we don't agree with Zillow or Redfin. Come on, guys. We have something better in this country to do. Let's move on. All right. Where are the rates? Well, rates for 30-year conforming, yes, baby, they're under 7.5, 7.444. If you shop that rate, I'm sure you can get the 7.3s. Jumbo just completely collapsed, down 24 basis points. FHA pretty much flat. It was as low as 7.20, but it's kind of bounced up a little bit off of that. But I'm excited to see this. We're hoping that the bond market continues to take a little bit of a dip. Today the bond market was kind of flat, didn't really do a whole lot. So we're not going to see rates do anything tomorrow. But we just need to see, the Fed come out with dovish remarks about the future. Like they always say, the Fed continues to come out saying, hey, everything we do today will not affect until next 6 to 12 months. Well, guess what? 12 months ago is when you started really going crazy nuts on raising all this, or raising rates actually 2 years ago, or not quite 2 years ago. But the effect is happening. And if we can get real numbers on unemployment, because the numbers that the government keeps coming out with is bullshit. If you break it down, you're seeing that we're at an all-time high for people who have multi-jobs, but they don't look at them as multi-jobs. And then we're seeing that the number one producer in every single month, the number one producer of jobs is the federal government, the government that has so much debt that we're going to go bankrupt, or they're going to do an event such as print money and print us into inflation madness so that debt looks like it's nothing to them. That's exactly what either is going to happen. Or if you really want to know what we really need to happen is that the Fed come out and buy mortgage-backed securities and do quantitative, and sort of back. If you actually start buying these, then we're going to see rates drop at least 1 point overnight, 1 point down. Bingo, 6.5, and beginning of six at the early sixes. And then we're going to see the market kind of get hot again. It's not going to go crazy, but it's going to be level and steady. The last thing we need to see is American wealth destroyed. I mean, destroyed, because your home goes down in value and the stock market, which is the other part of American wealth, collapses. Which I have a feeling that in the next 6 months, we are going to see that happen. In fact, guys, if you look at the charts and you look at historical charts, anytime the Fed starts to go down on interest rates, starts to ease interest rates, we have always had a quick pump in the stock market, followed by anywhere from a 15 to a 35, 40% drop in stocks. Why? Because all the tightening that they did for the last few years have all come to fruition months after they start lowering it. They're always behind the curve. That's what they do, and that really crushes American citizens. Guys, thank you very much for joining me today. I really appreciate it. If you have any questions or anything, please leave them down below. Otherwise, I will see you tomorrow. You guys have a fantastic day.